Ladies and gentlemen, welcome to the 9th Indonesian Finance Association International Conference. We would like to welcome the Honorable Chief Executive of Capital Markets, Financial Derivatives and Carbon Exchange Supervision, Indonesia Financial Services Authority, Mr. Inarno Jayadi. We also would like to welcome Professor in Finance, National Chengchi University, President Asian Finance Association, Professor Yen Ru Chen. Professor in the Departments of Economics, Finance and Real Estate, National University of Singapore, President Asian Bureau of Finance and Economics Research, Professor Sumit Agrawal. Chair of Advisory Board, Indonesian Finance Association, Professor Eduardus Tandalilin, PhD. President of Indonesian Finance Association, Professor Irwan Adi Ekaputra, PhD. President Director of Indonesia Stock Exchange, Mr. Iman Rahman. Board of Commissioners and Directors of Self-Regulatory Organizations, stakeholders in the capital market, all of the invited deans, lecturers, students, and academics. Thank you for joining virtually. We could not be more grateful for the spirit of participants in this year's conference. In conjunction with the 46th year of Indonesia Capital Market Reactivation, the theme for this year's conference is Sustainable Finance and Capital Market, Investing in a Greener Future. Although we could not meet in person for this event, we are sure all of you will still benefit and gain knowledge from the conference. We also hope that it could enhance Indonesian financial scholars' contribution to the international academic landscape and participation in advancing the financial literacy and policies in Indonesia. Ladies and gentlemen, we will start today's event by opening remarks delivered by IFA President. Please welcome Professor Irwan Adi Ekaputra, PhD.
Thank you, Ms. Yolanda. Assalamualaikum, salam sejahtera, shalom, Om Swastiastu, Namo Buddhaya, salam kebajikan. Very good morning to all of us. Welcome to the 9th Indonesia Finance Association International Conference in conjunction with the 46th anniversary of the Indonesia capital market. First of all, I would like to thank all of your participation in this international conference. In particular, I warmly welcome and thank the distinguished Chairman of the Board of Commissioner of the Financial Services Authority, or OJK, represented by Chief Executive of Capital Markets, Financial Derivatives and Carbon Exchange Supervision, Bapak Inarno Jayadi. This conference will not be possible without the relentless support of the Indonesia Stock Exchange, Indonesia Central Securities Depository, and Clearing Penjaminan Efek Indonesia, or ID Clear. Hence, please also allow me to kindly greet and express my gratitude to the distinguished President Director of the IDX, Bapak Iman Rahman, and IDX Board of Directors and Commissioners. Distinguished President Director of Indonesia Central Securities Depository, Bapak Samsul Hidayat, and Indonesia Central Securities Depository Board of Directors and Commissioners. Last but not least, distinguished President Director of ID Clear, Bapak Iding Pardi, and all ID Clear Board of Directors and Commissioners. In this important event, we will also have the support from our renowned speakers, Professor Yen Ru Chen, Professor and Associate Dean for International Affairs, National Chengchi University, and also President of Asian Finance Association. We have another renowned speaker, that is Professor Sumit Agrawal, Lo Tak Kwong Distinguished Professor of Finance, Economics and Real Estate, Managing Director, Sustainable and Green Finance Institute, National University of Singapore. Ladies, gentlemen, and distinguished guests, I'm delighted to welcome all of you to this year's conference, where we gather under the theme of Sustainable Finance and Capital Market, Investing in a Greener Future. Our theme reflects the pressing need for a paradigm shift in the way we approach finance and capital markets. In a world grappling with environmental challenges, social inequalities, and economic uncertainties, the role of sustainable finance has never been more critical. Financial markets should not just be instruments of profit, but engines of positive change. Together, we have the power to shape the world we want to live in, and sustainable finance is the tool that can help us build a better tomorrow. Sustainable finance encompasses a wide array of practices, from green bonds, ESG investing, to carbon markets, and we should allocate capital in ways that promote environmental sustainability, social equity, and long-term economic resilience. They remind us that financial success and environmental stewardship can and must go hand in hand. As we delve into this conference, let us remember that climate change, biodiversity loss, and social inequality are not abstract concepts. They are the defining challenges of our time, and they demand real actions. We must ask ourselves, how can we, as financial professionals and academics, contribute to a greener future? How can we ensure that our investments do not harm the planet, but rather nurture it? How can we promote inclusivity and social justice through financial decisions? In conclusion, I'm grateful to all of you for joining us at this conference. Your presence here is a testament to your commitment to positive changes, and let us make the most of this opportunity to learn, collaborate, and chart a course toward a greener, more prosperous future through sustainable finance and capital markets. This year, as already mentioned, we have 66 presenters from 6 countries and well over 700 registered participants. Finally, I would also like to take this opportunity to congratulate and thank Professor Eduardo Standalilin and the steering committee members of the IFA and the joint organizing committee led by Dr. Leo Indrawardana. And also, I'm very grateful for the participation of all presenters, participants, distinguished guests, and all of our partners for their continued support to the IFA. Thank you for your kind attention and have a fruitful conference. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Prof. Eka Putra, for the speech. Next, we will hear the speech delivered by President Director of Indonesia Stock Exchange, Mr. Iman Rahman. The time is yours.
Thank you, Yolanda. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Our honorable guest, Chief Executive of Capital Markets, Financial Derivative, and Carbon Exchange Supervision, Member of the Board of Commissioners of the Financial Service Authority, OJK, Bapak Inarno Jayadi, Chair of Advisory Board Indonesia Finance Associations, Professor Eduardo Standalilin, President of Indonesia Finance Associations, Professor Dr. Irwan Adi Eka Putra, President Director of KSEI, Bapak Samsul Hidayat, with all the members, directors and BOC of KSEI, President Director of KPI, Bapak Idin Pardi, with all the members of BOC and BOD of KPI, my colleague, BOD and BOC of Bursa Efek Indonesia, Professor in Finance, National Cheng Chi University, and President of Asian Finance Association, Professor Yen Ru Chen, Professor in Department of Economics, Finance and Real Estate, National University of Singapore, President of Asia Bureau of Finance and Economics Research, Professor Sumit Agarwal, speakers of the parallel sessions, Board of Commissioners and Directors, and distinguished guests, ladies and gentlemen. Good mornings and welcome to the 9th IFA International Conference 2023, which is held as a part of the 46th anniversary of Indonesian Capital Market Reactivate celebration. This event is a result of collaborations of the OJK, Indonesia Stock Exchange, Indonesia Clearing and Guarantee Corporations, and Indonesia Central Securities Depository as a concrete action from Indonesian capital markets to support scientific and academic research, especially in subject of finance. This year, we came up with the Sustainable of Finance and Capital Market, investing in greener future. As our grand theme, I believe it's a relevant topic to raise the study further, as global society has become more aware of the impact of our business has on the environment. Sustainable finance is not about reducing our carbon footprints, but creating a balance between financial returns and positive social and environmental outcomes, integrating ESG consideration into all aspects of financial decision-making, thus creating a more sustainable future for all. The ultimate goal is a shared vision of sustainability, meeting the needs of a present without compromising the ability to future generation to meet their own needs. Distinguished ladies and gentlemen, today demand of sustainability investment products is rapidly increasing. This is demonstrated by the increasing global investment value in the sustainability category, which grew to US $35.3 trillion in 2020, an increase of 55% from 2016, as reported in the Global Sustainable Investment Review 2020. This value is equivalent to 35.9% of the total value of global asset under management, amounted to 98.4 trillion US dollar. Such trend also happened in Indonesia domestic market. In July 2023, there are 21 domestic mutual fund and ETF with passively tracked ESG stock index with total AUM of 5.2 trillion IDR or 331 million US dollar. This number was raised dramatically from 2015 figure, with AUM rise 145 times from 36 billion rupiah or equivalent 3 million US dollar from only one product. Therefore, integrating sustainable finance into our business as usual will answer the need of domestic and global investor and attract investment into the companies. In addition, based on our internal research, the integration of ESG aspect into day-to-day business operations has a positive impact on the company financial performance and overall company's reputations. Since the end of 2021, IDX has collaborated with Sustainalytics to provide ESG risk rating for 80 listed companies included in the IDX 80 and provide investors with information related to ESG aspects. Amongst the 80 companies, there are 16 companies have low ESG risk ratings, 28 companies have medium ESG risk ratings, 23 companies have high ESG rating, and 13 companies have severe ESG risk ratings. The lower ESG risk rating means the company have a better ability to manage risk and a better ESG performance rather than the higher ESG risk. Based on the data as of September 2023, about 50% of listed companies with low ESG risk rating experience larger share price appreciation year to date than companies with medium and high ESG risk ratings, which increased only 40 and 41% respectively. Meanwhile, if we observe year-on-year growth of 6 months revenue ending June 2023, there is no significant difference of growth amongst companies with low, medium, and high ESG risk ratings with positive growth. However, the group of companies that post negative growth, the companies with high ESG risk rating have minus 80% growth, while companies with low and medium ESG risk ratings only have minus 11 growth in average. One insight that we can take from this information is that transformations into a more suitable business will not have a negative impact on financial performance, Negative impacts are not immediately visible in companies with medium or high ESG risk rating. However, as investors become more aware of the importance of running a sustainable business and with the support of ESG related metrics as well as evolving regulations, we believe that the sustainability aspects will become an important factor for investors to consider. Therefore, we can high hopes that the future is green. Recently, IDX, together with the related stakeholder, has successfully launched IDX Carbon to support decarbonization effort to achieve net zero by 2060 or sooner. IDX launched the IDX Carbon on 26th of September 2023. IDX Carbon provides fair, orderly, and efficient carbon trading in a seamless platform. It is part of our commitment and investment for a greener future. It is also announced that IDX also have been rated ESG scoring by Sustainalytics and grade 16.9, high risk rating, low rating, and we are the second lowest ESG score rating amongst the stock exchange in Asia Pacific. Ladies and gentlemen, I'm delighted to see so many people participate in 9 IFA International Conference 2023. We hope that the sustainable finance related research made and presented in the event will contribute to the more sustainable business practice and better world of our humankind. I would like to thank all of you. I hope you will enjoy the discussion and gain new insight that are applicable for the industry and betterment of this world. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Mr. Iman, for your speech. Ladies and gentlemen, the event continues with keynote speech and opening of the conference by Chief Executive of Capital Markets, Financial Derivatives, and Carbon Exchange Supervision, Indonesia Financial Services Authority. Please welcome Mr. Inarno Jayadi.
Thank you, Yolanda. Thank you, Yolanda. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good morning, Shalom, Om Swastiastu, Namo Buddhaya, and good day for everyone. Distinguished guests, Pak Iman Rahman, President Director of IDX and other attending directors, Pak Samsul Hidayat, President Director of KSEI, and other attending directors, Pak Iding Pardi, President Director of KPEI and other attending directors, and all Board of Commissioners of IDX. I see Pak Rahman, Pak Karman, and also Pak Arisandi, and Board of Commissioners of KSEI, Pak Fuad, selamat pagi Pak, and Pak Indra Kristanto, Prof. Irwan Adi Eka Putra, President of IFA, IVA, and also my guru, Professor Edwardus Tandelilin, Chair of Advisory Board of IVA, the excellent speakers, Professor Yen Ruchen, President Asian Finance Associations, Professor Sumit Agarwal, President of Asian Bureau of Finance and Economic Research. All speakers and all participants come in person or virtually. First of all, I would like to say congratulations to all of us for the 46th anniversary of Indonesian capital market. This is a long journey and achievement for our capital market. Of course, it is an honor for me to deliver a speech at international conference, Sustainable Finance and Capital Market, Investing in a Greener Future, hosted by Indonesia Financial Associations, IVA, in partnership with the in Indonesia Stock Exchange. Ladies and gentlemen, please allow me to give you a quick highlight of our capital market performance. As of the beginning of the third quarter of 2023, the Indonesian market capitalization experienced the highest growth among the Asian countries. Indonesia also has the highest number of issuers in the Asian region and ranks fourth globally. These excellent performances are accompanied by a four-fold increase in the total number of investors over the past 5 years. Moreover, this year, the number of investors has grown by about 11% year to date. The Indonesian capital market has been displaying positive signs of growth recently. Our index, IHSG, continues to maintain almost 7,000 points, and the market capitalization value has grown by approximately 5.7%. The total asset under management have also shown improvement, reaching nearly 850 trillion, or a growth rate of about 3%. Furthermore, the net asset value of mutual funds has increased by approximately 3.4% year to date. Despite this achievement, there is still room for further improvement in the market effectiveness, efficiency, and resilience. The key to achieving this is maintaining market integrity, which will help face future challenges, including those related to the economy and climate change. Ladies and gentlemen, distinguished guests, our planet, Earth, is facing serious problems. And it's not just the environment that affected. Vulnerably, communities are suffering the most due to rising sea levels, food insecurity, and the loss of biodiversity. The recent global pandemic has reminded us that the health of our planet is closely linked to our well-being. We must take action now to prevent these issues from worsening. Sustainable finance, also known as green finance or responsible investing, and can play a significant role in addressing these challenges by redirecting financial resources toward projects that promote environmental sustainability and social well-being. We can mitigate the adverse effect of climate change and support the affected communities. This includes investing in clean energy, green infrastructure, and social responsible enterprises. Sustainable finance is not just a trend, but a powerful tool for transformation, and it can help us create a better future for all. Ladies and gentlemen, several initiatives and approaches have been taken by OJK, IDX, and others to promote sustainable finance. OJK has supported IDX in introducing the 5 ESG index, which include the Sri Kahati index, comprising the list of shares of companies based on their ESG performance. And in the bond market, OJK has released regulation number 60/2017 regarding green bond issuances and is currently revising it to cover sustainable thematic bonds or sukuk, including green, social, sustainability, sukuk-linked wakaf, and sustainability-linked instrument. OJK has new role as the authority supervising carbon trading through carbon exchange in Indonesia, as mandated by the new law number 4/2023 regarding strengthening the financial sector. This framework aligns with the government's commitment to reducing greenhouse gas emissions and achieving net zero emissions as part of the ratification of the Paris Agreement document and Indonesia NDC's initiatives until 2060. To follow the mandate, OJK has issued OJK Regulation number 14/2023 and OJK Circular Letter number 12/2023 as the regulatory framework to support carbon trading through carbon exchange. Based on these regulations, OJK has permitted IDX to become Indonesia carbon exchange provider. This accomplishment is critical as the implementation of carbon exchange is becoming one of the important targets for many countries in the world. Now, Indonesia is on par with other countries, like our neighbor Singapore, Malaysia, South Korea, China, England, and the European Union in the carbon trading context. Ladies and gentlemen, looking ahead, there are still many challenges we need to face regarding sustainability. One of these challenges is addressing climate-related risks and opportunities. To respond to this challenge, developing investment instruments that support transition activities and mitigate the impact of this transition, known as just transition, may be critical. Additionally, the demand for sustainability-related information is becoming increasingly essential in terms of quantity and quality, especially related to implementing ISSB standards. Determining the pathway toward high-quality sustainability reporting by adopting and implementing the ISSB standard is crucial. Data availability and data quality are also significant issues in the implementation. Therefore, we need to map the gaps between the existing national requirements for sustainability disclosures and the requirement of the ISSB standards. The bigger the gaps, the more significant challenges we face. That is our homework. Furthermore, when it comes to implementing carbon exchange, it is essential to keep the carbon market governed, fair, transparent, accountable, and inclusive. This is also a challenge that we must address. Ladies and gentlemen, all these challenges require collaborative work where all stakeholders play their roles and work together to build awareness and strengthen the capacity. Therefore, we need to work with all elements within the ecosystem, including regulators, national standard setters, securities exchanges, assurance providers, corporate preparers, capital providers, investors, and also academia. I'm sure this conference will address and discuss these issues. The excellent speakers, both in the plenary session and parallel sessions, will share their valuable knowledge and experiences so that we can learn a lot from them and each other. I hope this conference will benefit all of us, and everyone here will find this conference enjoyable and enlightening with positive and fruitful discussion. Finally, I greatly appreciate the IDX, the IVA, yeah, especially Professor Eduardus Tandelilin, my guru, and also Professor Irwan Adi Eka Putra for inviting me for the excellent collaboration in conducting this delightful conference. I also thank all national and international participants for their awareness and participation in this agenda. With that, I will end my speech. Wassalamualaikum warahmatullahi wabarakatuh. Salam, Om Swastiastu, Namo Buddhaya, and a good day for all of us. Thank you.
Thank you, Mr. Inarno Jayadi. Before we continue with the plenary session, we're going to have a photo session first with the speakers today. Please kindly position yourself in front of the camera. We're going to have a photo session with all the invited speakers and also guests. Please position yourself and give your best smile. 3, 2, 1. Three, two, one. Please kindly hold. 3, 2, 1. Okay, thank you very much. Ladies and gentlemen, next we will begin the plenary session presented by Professor in Finance and National Cheng Chi University, President of Asian Finance Association, Professor Ian Ruchen. And we would like to also welcome the moderator for the plenary session, Assistant Professor in Finance, University of Bengkulu. I would like also to remind before we continue with the plenary session, please fill out the attendance link of each session for today's plenary session in order to get the conference certificate and also have the chance to be one of the lucky participants who gets the door prize. Mr. Inanu Jayadi, please kindly, if you want to leave the room. Thank you so much for your presence today and also the keynote speech for today's opening session for the Indonesian Finance Association International Conference.
Thank you. Thank you.
Ladies and gentlemen, we would also like to inform you that after the plenary session, we will also have a break first, and the parallel sessions today will start at around 1 p.m. and you may go to the room through the link also already provided. And tomorrow, the plenary session will start at 9 a.m. in the morning. Here is the link for the attendance for each session for today's plenary sessions. And now we will begin the plenary session. We would like to welcome the moderator for the plenary session, Assistant Professor in Finance, University of Bengkulu. Please welcome Mr. Berto Usman, SA, MSc, PhD.
Thank you so much, Ms. Yolanda, for your kind introduction. Good morning, everyone. I'm happy to stand here to welcome all of you, our guests, our distinguished attendees and participants in the plenary speech for the first session of the 9th Indonesia Finance Association International Conference in conjunction with the 46th Indonesia Capital Market Anniversary. So let me check if our keynote speaker is available already in this room. Let me say hi first. Hello, Professor Ian Ruchen. Hello, Professor Ian Ruchen. Are you there? All right, nice. I can see you. You are visible now. All right. So, good morning from Indonesia, Professor Ian Ruchen, and good evening in the US time. So let me check if your audio is working or not. Can you? Oh, I see you raising your head. Oh, I think there is a technical sound problem, right?
Can you hear me?
Yes.
Yeah, okay.
You're audible
Okay.
now. Yeah, that's
Okay,
perfect.
great.
All right. So Professor Yan Ruchen is here already with us. So before we start, I would like to introduce the profile of our first keynote speakers in her first plenary speech. Professor Yan Ruchen, PhD, is a professor and associate dean for international affairs of the College of the Commerce at National Cheng Chi University, Taiwan. She received her PhD from the University of Houston, USA in 2003. Before joining to NCCU in August 2014, she taught at the University of Houston and National Cheng Kung University for over 14 years. Professor Chen has been awarded for teaching excellence several times in all three universities, and her research and teaching interests include corporate investment, financing strategies, executive compensation, merger and acquisition, and ESG sustainability. Her research work have been published in many famous international journals, including the Journal of Corporate Finance, Financial Management, Journal of Business Finance and Accounting, Pacific Basin Finance Journal, Research in International Business and Finance, Review of Quantitative Finance and Accounting, Journal of Business Research, Corporate Governance International Review, and etc. She recently joined the Center for Business Sustainability, a research center at NCCU, as an associate director. She has been in charge for a research project on industrial development and corporate sustainability, and policy-based project on sustainability finance and corporate sustainability. In addition, Prof. Chen serves as the president of the Asian Finance Association, an associate editor for the Asia Pacific Journal of Financial Studies, an editorial board member for the Asia Pacific Review of Management, a guest editor for 2 special issues in the Journal of Financial Studies, and deputy secretary in general of the Taiwan Financial Association. In addition to academic services, Professor Chen provides professional services, including transformation projects, financial analysis, internal training to numerous government agencies, financial institutions, and industrial businesses. In addition, she commonly chats with the entrepreneurs of startups for their numerous questions. Prof. Chen also serves as an independent director in a public listed company in Taiwan. She has been a popular faculty in the executive education and often invited for industrial talks. She wishes to link her research to industrial and national development. All right. Before we start with Professor Chen's session, I would like to remind Professor Chen that we have pretty much time, professors. We have around 1 hour and 48 minutes. Perhaps you can spend around 1 hour and 15 minutes for your talk. And then we will be keep going with our Q&A session for around half hours. And then, of course, there will be an open session for our participant to ask their question. They can directly ask and directly interact with Professor Chen if they have something in mind and asking for several questions. And for sure, it is also possible for our participant to type down their research question in the chat box, and we will be further discussing about the potential discussion with Professor Chen. So without further ado, I would like to welcome Professor Yan Ruchen for her presentation. Please, Professor Yan Ruchen, the screen is yours.
Thank you very much. I hope you can hear me here. Clear?
Yeah.
Okay.
Yeah.
Great. So can you share my file that I sent you earlier a couple of days ago? Because I cannot share by myself.
All right. So let me see if you are able
Yeah,
to
because
share
the host prohibited the participant to share the screen. Yeah.
All right. So I will ask the committee to also make you as the co-host, so you are able to share your presentation.
Yes, please.
Yep,
Yes.
let me see. Well, can I ask the committee member to help Professor Yan Ruchen to change her status as the co-authors, please?
Yeah, I try to share, but it's not
Mhm.
allowed. It's
Still
not
not allowed?
allowed. Yeah,
All
not
right.
allowed. Yeah.
So let me see.
The files there, Pak Leo.
Yeah, the file is at Leo as well. Yes.
Yes, just wait a minute, please. I already asked the committee to give you the access.
Okay, great. Yes, I can. I'm now okay to share.
Okay, yeah. Good.
All right. It is visible now, Professor Lia.
Okay.
It's peaceful? Okay, great.
Yes.
Let me. Okay. So thank you so very much for inviting me to give the plenary talk here. It's really a great honor. And I think the theme of the conference happened to be in the same line of my research. So I would like to share my recent research with you regarding the sustainability. In particular, I will emphasize on the green first. And since my specialty is in the corporate finance, especially the investment and financing strategy. So I spent quite a few years working on the merger acquisitions for Asia. And I figured that there are some issues related to the greens. So I start to work on the ESG, especially the green in the merger acquisition. So this is my brief introduction, but I think the moderator already introduced me well enough. So I will start with today's talk. So in the beginning, I will share one of my recent research. Some of the faculty here may already have some idea about this one because the earlier version has been presented at UGM. But this one is the most comprehensive one. And after the research sharing, I will also talk about some issues regarding the merger acquisition targeting ASEAN countries, in which we can also see some potential research ideas related to the environmental issue as well. So let's work on the first part. So my first part is looking into the research related to the global environmental awareness and the climate risk of companies' acquisitions, and also how the investors react to the company's acquisition. So this is one major research that I recently worked on, and I will present the same papers at the FMA tomorrow. Okay, so I think as the previous opening, we already know that the Paris Agreement raised quite a few attention from the countries almost around the world. And in this Paris Agreement, I think the most important issue is we commonly agree that we have to control the increase on the climate temperatures. So I think a very important thing compared with the previous Tokyo Protocol is there is a common understanding and agreement around the world. So after the Paris Agreement, most of the countries has committed to the consensus agreement, and therefore the Paris Agreement become effective within a year after the COP conference. So I think first thing is we have seen quite a few countries submitted their first, and some even submitted their second national determined contributions. And I think the Indonesia submitted in 2021 as well. So in this one, following this one, a lot of countries, including the Asian countries, the government has set up quite a few related national policies to focus on how to reduce the carbon emissions, and also try to move forward to the goal of the net zero emissions. And Taiwan's government also set up the net zero 2050 net zero policies, and in 2022 as well. So, including, I think it's more than 160 countries already have the related policies related to the carbon emission. So that's first thing regarding from the government's agenda. And second thing is, we all know that the investors play a very important role in the ESG. I think before what we know of Paris Agreement, the institutional investor already emphasized so-called social responsibility. So by that time, they were looking into the investment targets without hurting the humankind. Like they will avoid the tobacco industry, they will avoid the alcohol industry as their investment targets. But after the global awareness on the environmental issue, the institutional investor emphasized further onto the environmental as well as the social and the governments. So this is one of the reports from the PwC. They make a survey over some institutional investors, and they find out that majority, around 79% of the institutional investor being surveyed will emphasize the ESG when they select their investment target. And also 75% of them will agree that they would accept smaller profitability decrease when they target the ESG firms. And I think the most important thing is we have almost half of the respondents replying that they would withdraw the capital from the company that do not emphasize the ESG. So 49% may not be as good as those 75 or 79. However, it is very critical for those institutional investors to withdraw because their trading portfolio, their portfolio holding is always quite a lot. So the changing, withdrawing the capital would cost them quite a lot in switching investment targets. So if that's the case, then 49% actually means a lot. So this is from the practitioner's perspective. And also we're looking into some recent research. We can see from academic research, there are many studies looking into how the Paris Agreement, how the global environment issue would change the investors' behavior or companies' behavior. So for example, that the foreigner institutional investor from the high ESG performance will enforce their perception on investment target in overseas. Also, investors, they see the carbon emission as the source of the risk and consider that in their asset pricing models. And also, for the company's perspective, we find out that company, they will replace direct emission with indirect emission in the supply chain. But if the company is the good company, I mean the customer with good ESG emphasis, they will not replacing direct emission with indirect emission because they would like to maintain their high reputation as well. So now we have to looking into one issue as previously mentioned. There is a possibility of replacing direct emission with the indirect emission by sending out the production in overseas countries or by importing products from overseas without manufacturing. So now let's see how the supply chain is important in the entire ESG process. So let's understand the scope 1, 2, and 3. The scope 1 is the carbon emission related to the company's operation. And the scope 2 emission is the emission related to the energy usage. So these two are actually in the hand of the companies themselves. And the scope 3 actually accounts for a large proportion is from their supply chain, including upstream and the downstream. So for example, if we are talking about the banks, most of their carbon emission actually from their customers, the customers who loan the money from the banks. So in other words, the banks, even though they have a really small scope 1 or scope 2 emission, they have really strong and high level of the scope 3 emission due to the carbon emission from their customers. So let's take a look of the picture in the right up side here. So you can see if the business is running the related to the raw material. They, for example, like mining, like steel, those are related, they have more carbon emission from their scope 1 or scope 2. On the other hand, if the business is more related to retail, for example,
Andrew,
yes,
can you hear me? Sorry,
yes,
this is Irwan. Sorry to interrupt. Can you switch the screen? Because now you're showing the double screen instead of the one big screen.
Oh, really?
Yes.
So how?
I think there's a sign on top. You can have a switch screen.
Yeah, on the corner left. Yes.
Left corner.
On the top?
No,
This
on top.
one?
No.
The second one from the corner left, Professor Yan.
Go on top. Go to the top. There's some drop down list. There. I think the second from the left.
Second from the left?
Yeah,
oh,
I think
this
the
one?
next one, yeah.
Yeah, you switch that.
The lowest one, yes.
There you go. That's perfect. Thank you.
Thank you for reminding me. Because I have two screens. So one screen is the full screen, the other screen is the two. So I thought only me looking into the two. Okay.
Yeah.
So thank you for reminding. So here you can see that for the end product, if the business operation is more related to the end product, like FMCG, fashion, design, food, those are the one with a really high percentage of the carbon emission from their supply chains. So if this is the case, then when we're talking about how to reduce the carbon emission, we should not only looking into the company themselves, but also have to looking into their entire supply chain, including the upstream and the downstream. So in this case, it basically tells us when we are looking forward to the goal of the net zero policy, it is definitely necessary to see the scope 3, your supply chain. Or on the other hand, we can see that the customers will be really concerned about the carbon emission from their supply chain. So majority of the company, the large company worldwide, multinational company have joined the Science-Based Target Reduction Initiative, and they will commit to reducing the carbon emission in their upstream and downstream supply chains. So in other words, that basically when we looking into the environmental risk, we cannot avoid looking into the supply chain. So if those multinational large corporations facing the challenging of the carbon emission reduction, they will looking into the suppliers. So how would the supplier do when they face the challenging from their customers, their influential customers? So when we're looking into the literatures, the literature has two sides of the story. One side say that when the suppliers face the challenge, or the company face the challenge of the carbon risk, they will increase the cross-border merge acquisition and reducing domestic merge acquisition. And by doing so, they will move the production to overseas. In other words, they will identify lower Scope 1 and Scope 2 emission in their own country. And of course, they can even reduce the production by just simply importing the goods from overseas. On the other side, we see another paper looking into the customer's responsibility play a very important role. You know, those customers' corporate social responsibility will reflecting how they would do when they face the carbon emission risk. So they will have the positive impact on the suppliers, but they will not just move replacing the direct emission with the indirect emission to their from their suppliers. In other words, that they will help their supplier downstream. Those downstream customers will help their suppliers to improve their CSR, their ESG performance, instead of just putting those emissions to their suppliers. So in other words, when we're looking into these two sides of the stories, we know that suppliers could have two sides of the reactions. So this is what we try to understand in this research. So our research is different from Dai et al. 2021 because they are looking into the customers' behavior, the implication of customers' behavior on foreigner suppliers. What we try to emphasize on is we try to looking into the U.S. suppliers when facing the pressure from globally influential customers. And the reason of doing so is we know those influential customers face the challenging due to the global environmental initiatives. So they not only face the challenging from themselves, but from all over the world. So the U.S. suppliers, the reason we emphasize on the U.S. suppliers because they have more resources to react to those global pressures. And also we have a different focus. We emphasize, although both of the study emphasize the supply chain relationship and carbon risk, but they're looking into the substitute effects between customer and supplier. But this paper is looking into suppliers' intention to deal with the climate risks through the merge acquisition. And also the most important innovation in this study is we do have a different risk measurement. Like Dai et al., most of the prior study emphasized measure the carbon risk by using the carbon emission. Of course, they are positive related, but it is already exposed information. You do not understand the intention of the company when they face the challenging from their influential customers. So we propose a new different measurement to looking into those suppliers' intention to respond to their influential customers. Okay, so these are the two different hypotheses that we normally see regarding environmental challenging. And I think I mentioned the concept of both two as well, because one is pollution heaven. It basically say you will remove your own problem to overseas or to your suppliers. The Porter hypothesis looking into that you will try to solve your own problem, your emission problem, by improving your own technology or improving your efficiency in production and energy usage. So when supplier face the challenging from their influential customers, we know that first thing is the customers do affect the suppliers from the prior studies. And here we propose that the merge acquisition is the quick response to the pressure from their influential customers. And why is that so? According to the prior study by Hartford, we know the regulation change or technology change, economic shock, they tend to be a very important driving force behind the merge acquisition. So, ever since the Paris Agreement in 2015, we don't have much time to wait for the actions. So the merge acquisition being a quick investment strategy, the company is more capable to deal with the problem in the faster path. So this is why we propose that the supplier will take the merge acquisition as the response to the pressure from their influential customers. So I will, and also previously we see the environmental laws indeed shows the positive and negative response from the government, from the literature. So here we basically could see very inconclusive outcomes and worse further studies. So what we try to looking into is based on the entire study, the prior literatures looking into the customer supplier relationship. And also we use the MMA, we propose the MMA as the response. So in here we have two hypotheses. The first one is based on the two different environmental related hypothesis. It's very likely that the climate risk of the merge acquisition could still increase or decrease their the magnitude of climate risk after the merge acquisition. And another one, however, if the company after the merge acquisition, or say the merge acquisition are associated with higher climate risk, then the long-term performance would be in danger. So what we try to do is to use the difference analysis. So the title is the Global Environmental Awareness. So the Paris Agreement played a very significant one. Although before Paris Agreement, there are already the CSR issue, but the climate risk indeed become very essential in the area outside of the European Union, especially in the America. So that's why we take the Paris Agreement 2016 as the exogenous shock. So we identify the post become one if the merge acquisition is taken in the year in 2017, 18, and 19. And we have to identify the treatment company. So for the treatment company, we have to identify the customer and supplier relationship. So here is our identification strategy. So we basically estimate the carbon emission for each company and sum up for each industry. And the industry definition is based on Pharma French 30 industry classification. And we try to identify high emission industries for 10 industries. However, we figure for the number 9, 10, 11, 12, they have a very similar number. So that's why we include them all together as well. In the low emission industries, we select 10 industry with low carbon density. And of course, we exclude the financial institution. Although previously I mentioned financial institution has the really high scope 3 carbon emission. However, the financial institution has related higher restriction in their merger acquisition strategy. So that's why we remove them. And also in the low emission one, we can see there is a classification called everything else. So we certainly cannot use it. So we remove that. But we still keep 12 industry for high emission, 10 industry for low emission. So here we identify customer supplier relationship 3 years before the shock 2016. So among those high emission, we identify top 20 company in each industry. So based on market share. So that is how we call them influential customers, because they have higher market power to force to put the pressure on the suppliers. And also for the low emission group, we identify 20 companies in each industry as well. And now we need to identify the suppliers for those each industries. So after identifying the data from the fact sets, we find out that some suppliers, some suppliers of the high emission customers will provide the goods or service to the high emission customers, but could also provide the goods and service to the low emission customers. Therefore, we can identify the suppliers in 3 categories. The first category is the suppliers providing goods and service only to the high emission customer. And the other 2 will be they are still proportionally providing goods and service to low emission customer or only to low emission customer. So we identify 625 firms in the treatment group by 15 firms in the control groups. And then we further identify their merge acquisition. So you can see the merge acquisition of the treatment group consists of 495 deals. And for the control group, there are 950 deals. So this is the identification for the treatment and the control. Now here comes the critical part, how we measure the climate risk. Our intention is to see whether or not the supplier has the intention to reduce the climate risk So we use the text analysis approach to analyze the degree of climate risk. So what we do is we have to identify the news announcement, the press release for each merge acquisition announcement. And we perform the text analysis on each of press release by using the climate change vocabulary. And this climate change vocabulary was identified from the paper by Ingalls 2020. So they use this one in their paper. They're looking into the asset pricing story, but since they already identify the climate change vocabulary, we follow this climate change vocabulary as the dictionary to analyze the press release. So we are able to measure the climate risk by naming the climate score. So using the Python natural language processing kit, we identify the score by dividing the frequency of dictionary words out of total number of the word in the document and times by 100. Therefore, the climate risk score will range from 0 to 100. The higher the score, the higher the climate risk involved in the merge acquisition. Here is one of the example I would like to show you in the press release. So you can see that from the title, this is the merge acquisition with the intention to acquire 2 solar energy projects in California. So this is what the company tried to deal with carbon emission reduction by reducing their scope 2 carbon emission because they use the alternative or say clean energies, and therefore their carbon scope 2 carbon emission will be lower. And this is the fastest way for them to do compared to change their operation or backward to ask for the carbon reduction for their tier 1, tier 2, or even tier 3 suppliers. An interesting thing is not only the high emission group will acquire solar energy project, also the low emission group. We see some of them try to acquire solar energy as well. So in other words, that within such a limited of time, those companies, those suppliers with influential customers, they will take the action to respond their pressure by engaging in cleaning energy, because that's the way to fastly deal with the carbon emission reduction. So we try to contrast with the innovation because as we mentioned, there is another side of the story, innovation hypothesis. So we want to know whether or not their merge acquisition actually engage in the innovation. So we use the same text analysis by adapting the innovation vocabulary from D et al. And to perform the same analysis as well. So there is the innovation score. So here comes the empirical models. So we have the climate score, innovation score, and also another robust one. And the most important thing is how well they have been doing after the merge acquisition. From the sustainability as a one, and also from environmental as the one. So is there any questions so far? If not, then I would just move on.
Yeah, I think we can keep going, Prof.
Okay, so now here is the climate score and the innovation score. So you can see that we don't see much change in the climate score from time to time, but we can see that for the treatment group, they do, actually for all of the group, they do have the increase, innovation from the 2013 to 2019. So now let's perform the univariate difference in difference analysis first. So we can see that, yes, there is a significant increase in their climate risk. However, when we're looking into this one, you can see that is because the control group has a significant reduction in their climate risk. However, the treatment group, the high emission group, they still maintain a very similar level of the climate risk after the merge acquisition. So in this case, you can see, compare these two groups. The treatment group, after the Paris Agreement, the treatment group still possess the higher climate risk compared to their counterparties. And how about innovation? Both of them has increased innovation from before to post the Paris Agreement, and the difference is not significant at all. However, you can see the treatment group, the high emission group, always maintain a much lower innovation magnitude compared to their control group at all times. Okay. Now here is our major studies. So major results. So you can see that the interaction term is what we want to looking into. So no matter we control with the industry fixed effect or not, you can see that the impacts is significant. Even though it's only at the 10%, but it basically says, just like the univariate analysis shows, that our high emission groups, after their when they face the challenging from their customers, they engage in merge acquisition. However, their merge acquisition still poses a higher climate risk than their counterparties. And how about innovation? Consistently, we see consistent with the univariate output, we do not see difference. In other words, that the high emission group, they do not engage any better innovation performance, although it is improved. Okay. So someone difference. Okay, yeah. Okay, so another thing is about post-merger ESG performance. ESG is for the sustainability. Environmental is for only environment. So you can see that for environmental, that company do receive the better rating by those rating agency for their environmental performance. So those companies, those suppliers who acquire the solar energy or other alternative energy, try to deal with the environmental issue. Their action, their merge acquisition action, will yield the rating agencies' attention, and their environmental performance will increase. However, for the long run, the entire ESG performance actually perform worse than their counterparty. So what does that mean? The climate risk, even though they try to engage in the merge acquisition with the clean energy, however, those clean energy may not deliver sufficient output as they expected. And also, it is the short-term techniques. As we mentioned, scope 2 is related to the energy usage, but scope 1 is related to their operation. So if the company really would like to engage in a long-term improvement, then the scope 1 is definitely the one they have to look into instead of just trying to reduce the scope 2 carbon emission. So we see the risk associated with the merge acquisition actually yield higher environmental rating, but for the long term, it still bring in the lower overall sustainability performance. How about financial performance? The financial performance, we try to look into the overall operation expenses, operation performance, and also looking into how the customers' certification regarding companies' merge acquisition, and also how the market value their decision making. So overall together, we do not see significant change regarding the operating performance. And for the customers, it seems like, yes, their action indeed attract the customers for more orders, for more business within just short limit, with the limited of time after the merger acquisition. However, the market does not seem consistent with the customers. It seems like the valuation for those merger acquisition of the high emission groups is not really favorable from the perspective of the investors. And then try to see further how the whether or not the reaction is consistent with their intention. So we try to separate the sample into the high climate risk merger acquisition versus low climate risk merger acquisition. So you can see, oh, this is the environmental rating. Actually, the environmental rating enhancement is not to those merge with high climate risk. In other words, that if you only buy in the so-called energies, clean energies, you do not really yield a large environmental improvement compared to your counterparties. However, if you engage in a merge acquisition with low climate risk, so you do something else to really consolidate your business operation into the better, say, efficiency usage in the efficient production or efficient energy usage. In that case, your environmental rating is actually improved. How about the financial performance? Actually, the story is the same, because for the long run, if you only engage in the energy merge acquisition, in the long run, the performance is going to cost a lot and is going to be poor compared with your counterparty. And the customers do not really buy in, actually. And also the market valuation, the negative market valuation is also goes to the merge acquisition with a high climate risk. So if this is the case, then how the investor take the action? So investor cares about climate risk. So they should do something. So what we try to do is we're looking into investors' response, and also we want to look into their actions for long-term improvement. So what we try to do is, first thing is, the reaction is whether or not they try to sell the holdings as we see the survey by the PwC. So if the investors is not satisfied with companies' strategies engaging in solar energy or other clean energies merge position, then they would not be happy about it, and therefore they could sell the stock and lower their returns. So you can see that almost all window periods, you can see the returns are all, the cumulated abnormal return significantly lower. And even for the long term, for 12 months, you still see a negative impact. So in this case, it basically says the investors are not really happy about such decision, engage such in merge position decision, engage in high such merge position in those high emission group. And how would they do if they are not happy about that? So they may sell the stock. And how about those investors, long-term investors would do? So would they take more action? So we're looking into the shareholder proposals. So if you are the long-term investors, you stay with the company, and then would you try to improve company's ESG? So we use the shareholder proposal. There's a governance proposal and environmental and social proposals. So here we see actually no significance. In other words, that shareholders who stay longer with the company and actually they do not take long-term action either. So in other words, that if you are not satisfied with the company's actions toward those global pressures on climate, on the carbon emissions, you could either sell the stock. If you do not sell stock, you stay with the firm, those investors pretty much will stay put instead of trying to make change through the shareholder proposals. And we try to further verify the story by interact with the high climate risk. And then you can see that the long-term impact is very significant if your merge position is particularly with high climate risk. And we also try to perform the entire analysis for the EU's case, but the findings are not observed in the EU. And the reason that we figure two potential reasons. One is there are longer history of the environmental awareness in EU. And also in our analysis, the press release is very important. But we could not find a sufficient press release for the case in EU. So this could also bias the result as well. And I think both of the potential reasons are meaningful and also reasonable as well. And for the sample of the US, we show those results is actually, we know that compared to the EU, the US did not have long history of with the environmental awareness or say carbon emission. So overall together, we would like to emphasize a few things. First thing is the carbon emission or say environmental issue is not a single issue for a single country. It's actually a global issue. So your customer from all over the world will try to influence your action toward the carbon reduction. So the supply chain become a very important force for the company to take the action. And I'm very sure that if we perform the similar analysis onto the companies in Asia, the result could be even significant, because we know, including Taiwan, including Indonesia and other Asian countries, we are actually the supply chain to many different businesses in the world. So we are all facing the challenging from all over the world. So such supply chain relationship is something pushing our government's action, our company's action toward the net zero policy. And also, I think in this research, we incorporate the qualitative analysis. We are using the text analysis. We are able to identify the intention of the company's merger acquisition strategy. In other words, that although financial variables are very important, but most of those variables are ex post, including the carbon emission, they are ex post. But when I'm looking into your press release, I can see your intention. And overall together, if you do not if you only emphasize on the short-term solution by reducing your scope 2 carbon emission, then the outcome could be good for short term only, because in the long run you do not see the favorable response from your customer, from your rating agency, or from your internal operation. And shareholders has a really significant. The shareholder could have a different actions. Some of them who are not satisfied will directly sell their holdings, making the company's stock performance worse. However, there could be some other group of shareholders stay long-term with the companies without taking too much arguments through the shareholder proposals. Okay, so these are the studies that I have done regarding the merger acquisition and the climate risk. So, is there any question? Or I can move on for the next one.
I think you can move on to the next slide, and then we will be waiting for the response from the audience during the Q&A session. Thank you.
Okay. So now let's looking into some merge acquisition targeting ASEAN countries. So I just identified some acquisition information. So these are the 10 different divisions based on the SIC code. You can see the industry titles over here. So this is, I think the data is from 2000 to 2020. So in this analysis, you can see that majority of the acquisition with the ASEAN targets emphasize on first thing, financial institution. And also, this is actually something surprised me, and also manufacturing and some fundamental transportation communication, and also some professional services. So these 4 divisions accounts for the majority of the merger acquisition in ASEAN. And you can see, if I'm looking into the industry pie by acquirers, majority of the acquirers from the financial institution. So if we look into the right-hand side, the industry by targets, you can see that the number of the financial institution the proportion of the financial institution becomes smaller, even though it's still at a large proportion, but much smaller. So what does that mean? That means the acquisition by financial institution is not necessarily targeting on financial institution. It could be targeting on others, okay, like manufacturing, the yellow one. And also they can targeting in the transportation, communication, those fundamental infrastructure, and also the service, the gray one here, professional service. So let's look further onto the four different one. So first thing, the largest one is the financial institution. So you can see that the number one acquirer is actually from investment fund, the holding company or other investment office. So it's basically for the investment purpose. And then the real estate. So, and in terms of the rank is actually the same rank. So you can see the investment holding is really a major buyers, major acquirers in the merge acquisition in this area. And real estate actually is the agency. However, it related to quite a few. The real estate market accounts for quite a few carbon emission as well, especially in the scope 3. Now, I further separate into what kind of company they are buying, because from the previously we see that financial holding company, they buy a lot. So H is the financial institution group. So among 19,000 deals by investment holding company here, only probably a quarter, 27% is on financial institution. Quite a lot in manufacturing, and also communication, transportation. And here, the I is the professional service. So in other words, that they do target on some business related to the related to the key business in ASEAN market. So these retail, manufacturing, and transportation, communication, and others really raise the concern about the environmental cost. Why would I say so? Because remember, the literature tells us a group of studies says the company may increase the overseas merger acquisition, but reduce the domestic one. So because all the data, all the merger acquisition here is the cross-border merger acquisition. So we can see there's really a lot of the cross-border merger acquisition by the financial holding company in other key business like manufacturing, construction, manufacturing, transportation, communication, and others. And also manufacturing. These are the manufacturing sectors. So you can see that if we're looking into the ranking, and you can see that majority of those manufacturing are actually with high carbon emission. So if the story is right that the investment company invest a lot in manufacturing, and majorities are actually in those high emission groups. So we should be worried about that, whether or not the cross-border merger acquisition in ASEAN would actually cost a lot to the ASEAN country regarding the carbon emission. And these are the transportation, communication, electricity. So you can see the needs for fundamental infrastructure, and also the graphical advantage is really a key to boost up the merger acquisition in this one, because we know the shipping and the water transportation is really a key business in ASEAN area. And also professional service. this one is basically in the high demand for the business and economic developments. So previously we have all cross-border acquisition. Now I would like to emphasize acquires outside of the ASEAN. In other words, that even though we say previously the data are for the cross-border acquisition, but some could still within the ASEAN. Okay, and I think the merger acquisition within the ASEAN is very straightforward, is very common and reasonable because the economic integration. So now we want to know further whether or not the cross-border merger acquisition from outside of the ASEAN, how would that affect us? So first of all, most of the cross-border merger acquisition in ASEAN are by ASEAN acquirers, so internal integration. We only see like 41,000 versus 14,000. Okay, so but even with this amount, much smaller amount, but still quite a few. But we can see the emphasis is still in the financial institution, followed by manufacturing, professional service, and fundamental transportation, communication, electricity. So again, there's still a concern of the potential carbon emission. And how about the acquisition metrics, acquire target industry acquisition metrics? So you can see that if outside of the ASEAN, if they are manufacturing company, when acquire a manufacturing business, the targets, they basically targets the business in the manufacturing as well. So this one will give us a concern that related to the studies in 2021 that the manufacturing firm may move their operation to overseas. Therefore, it gives us an idea that we may want to look further. How are these manufacturing deals about? And how about financial institution? This is the largest group of acquisition. So you can see that, yes, they still acquire like 1/3 of the deals related to the financial institution under the edge here. But there are quite a lot, 1684 deals related to the acquisition onto the manufacturing sectors, and also about 1,000 on professional services, and also 866 onto the infrastructures. So in this case, we have a very similar identification when we're looking into the full sample. But here, I think two things we can think about from these metrics. One thing is financials, certainly financial institution with their financial powers, they engage in more merger acquisition, that's for sure. But when they engage in the merger acquisition, it seems not just for the financial industry integration or say market developments. It seems like they are highly interested in the key local business as well. So in this, if that's the case, then we may have the similar concern as what we observe for the manufacturing. So overall together, based on the data we have, I think we could have several issues to think about for further research. One is regarding the economic development. The infrastructure needs is definitely required for the economic development, but those infrastructure actually often the sectors associated with the large carbon emission. So how can we really balance the environmental protection with the economic development? In Taiwan, you all know that Taiwan, we have the technology sector at the large. And even though during the COVID-19 years, the carbon reduction reduced, but after the COVID-19, when the business needs increased, and then the carbon emission increased again, and even higher than before. Why even higher than before? Because the China-America conflict moved a lot of Taiwanese company back to Taiwan. So again, the environmental issue is the key concern for the economic development. So this is also something worth to think about. And I think I looking into the Indonesia's policy, I think it's very amazing that I see the earlier time, even before the 2000, you start to think about the efficiency of the energy. And for all the way down to here, you try to develop the bio energy and other different way of increasing the efficiency of the energy. I think those policies are very important. But the issue is when the government set up the policy or set up the standard and requirement, do those policies provide sufficient incentives to the companies? The incentive could be financing incentive, for example, the better financing accessibility, or technology aids, or some other international or say regional integration, industry integration. I think those are something that we can think about regarding the policy-driven research. And at the end, I think a very important issue is we are now talking about the green, but the sustainability is not just about the green. And the green is actually just the beginning. Well, should I say just the beginning? Because before we talk about the green, we already talk about the CSR for a long time. And before the CSR, we talk about corporate governance for even longer time. So does that mean that now with the long-term emphasis on governance and on CSR, now when we talk about the green, if that's the case, that when we deal with the green and then we can really reach the sustainability, I think the story is still far away to answer. Based on the study I just showed you, you can see that sometimes you can fool the rating agency or your customer by engaging in green activities, but that's only for short term. For the long term, you actually pay off a lot. And sometimes you try to reduce the cost, and you may instead cut the budget of hiring, or increase the labor layoff, or you will reduce the activity to engage in better governance issue. So in other words, that when we put a lot of resources on the green activities, we actually will, just the other resources to the other activity could be set aside, could be reduced. So how can we really make sure those green activities would not hurt the other sustainability activities, especially like labor rights, human rights, society's balance, or say justice? That's something we have to think about, and it's very worth for future research as well. So this is pretty much I have for today's talk. So I would like to see some of your questions that we can discuss further. Thank you.
Thank you very much, Professor Yandru, for your kind presentation. And this one is certainly very fruitful and insightful sharing with us. So thank you so much. Anyway, before we start, I was wondering if your work is currently being under consideration for publication in a journal.
Oh, this one is the newly is just finished today. I'm sorry, this year. So I think what I try to do is I will have it presented in the major conference. So that's why I say this paper will be presented tomorrow in Chicago. I will fly to Chicago right after today's conference. So
Okay.
I will see how they look like, how they like these studies, and try to improve further.
I see. All right. Thank you so much, Professor. Very nice of you. So I would like again to invite our panelists as well as the attendees. If you probably have any questions, you can easily raise your hand and hit the raise hand button just under your Zoom menu. Then you can directly interact with our keynote speaker. So otherwise, the committee will also open the chance for the attendees to write down your question within the chat box. So that will be the two ways we can further discuss the material that has been shared by Professor Yandru. So please, I will kindly invite the panelists and the attendees. Please.
Yeah, you can stop sharing maybe, moderators.
Oh yeah. So let me. Yeah, Professor Yan, could you please stop sharing your screen so
Okay.
that we can see?
Yeah.
Okay. So we can see you clearly now. So anyway, in Indonesia, we certainly have several regulation that is growing over time, Professor Yan. So basically, before the year of 2000, we have concern about the ESG issue as well as the CSR issue, right? But as you already highlighted in your presentation, that we still have to deal with the dilemma between the economic development versus the environmental protection. Also, we still have to deal with how to better shape this issue in our very standardized way of dealing with its reporting, I guess, right? So, but anyway, I think this one is not only the Indonesian issue, but probably it is applicable with all the Southeast Asian nation in ASEAN.
Yes.
Yeah.
Yes. Yes.
Mhm.
I think what we have, for example, in the case in Taiwan, what we have is we see quite a few incentive policy. So the government try to provide some incentive to ask the company to comply with the so-called carbon reduction, or say net zero policy. But to be very honest, it's not easy. So let me give you an example. We have the large technology companies being required by their global customers. So they have to improve their carbon reduction. So those tier one suppliers, okay, I shouldn't name anyone. So you know what I mean, right? Those
Yeah.
major semiconductor companies. So they will in turns, go back to their tier one tier one suppliers and ask them to comply. Say, how about you sign a letter saying that you are going to change your energy to the clean energy in the following 3 years, and their suppliers, of course, will sign the compliance. However, when I sign it, I take action, right? But it's only a so-called engagement, the customer and the supplier engagement, but no action is actually taken until most recent year. So what I'm saying is, when the tier 1 supplier try to go back to the tier 2 suppliers and ask the tier 2 suppliers to take any action, is very difficult. So the government say, well, the difficulty is what is because transformation is very costly. And the government said, now I give you low interest rate, very, very low interest rate. So you can take the lower cost to increase your transformation. But actually it's very difficult to do so. Why? Because the medium business, not like those big company, tier 1 is normally, tier 1 supplier in Taiwan is normally large corporation. But tier 2, tier 3, they are normally small, medium. Small, medium, they are really hesitate to invest in new equipment, even though those new equipment may really increase the efficiency of operation or efficiency of the energy. So to them, it's really, really costly. So I think that's something not only about financing issue, but also from culture issue. They don't want to, the machine is still okay. Why should I dispose it? So this is something we really identify in reality. There's a one raised the hand. Someone raised the hand.
Let me see if someone is raising hand. So please, to our panelists and our attendees, if you have any question, please do not be hesitate to.
There's
Professor Iwan. Yeah, please, Professor Iwan.
Hi, Iwan.
Hi, how are you?
Good. How are you?
Thank you for the very interesting presentation and working paper.
Thank you.
I do have some technical questions if you don't mind. First of all, about the DID that you're using, you separate between the treatment group and the control group. My question is, how do you decide or choose the control group? Is it random, or if it is not random, then how do you make sure that it is comparable to the treatment group? That's probably my first question.
Okay.
The second one is, I understand that there are so many measures with regards to ESG scores. Which one do you use, and do you consider any variation between ESG providers or scorers in this sense? And then probably the third question is, I'm very interested with your description with regards to ASEAN companies. I wonder whether using that the description that you share with us, will we be asking the same questions as your paper, or will there be any pressing or different pressing questions that we need to answer using this ASEAN dataset? And probably lastly, now I have 4. You mentioned also from green to sustainability is a different matter. It takes another journey. What do you think is the intervention that either government or any supervision institution can use to probably accelerate this, materialize from green to sustainability? So those are my questions. Thank you very much.
Okay, great. These are many questions. So let's start with the first one. Regarding the technical one, I think the issue is, my research question is trying to emphasize on the global impact. So that's why I have to start with the so-called global influential customers, because only those group of people, those group of company has the power to influence their customers, their suppliers. So I think the only thing regarding the random or non-random is I do not really emphasize the randomness when I classify the treatment and control. And the only case is it's very difficult to randomize them. Why is that so? You think about the business must be related, so they will become their suppliers. So in other words, that the customers, when they choose their suppliers, they must have their logics of choosing suppliers. So it's not likely that they can be randomly selected. So that's the concern we have. So that's the answer I have. I'm not sure that should I or whether I can really randomize the suppliers to those influential customers, because for those large corporations like Apple, if you want to become their suppliers, it takes like more than 2-3 years to be qualified, to be verified by Apple. So yeah, it's very difficult to say randomness. And also, what's the second one?
The ESG score.
Oh, ESG score. The one I use in this one is the Refinitiv. And I know there are several different ESG rating agencies nowadays. And actually, we recently purchased several ones. So this is something we will further looking into. But in my test, the test, not really fully comprehensive one, just the test one, do not influence my outcome. So, but I will definitely use more comprehensive analysis because the data is just in. We purchase more data from S&P, also from Sustainalytics, and also I think there's another one, the Bloomberg's. So we purchased several more database. So we will perform the robustness check as well. So that's one. And then regarding the policy, right? I think let me answer the from sustainability to the from green to sustainability first, because this is some issue we are facing right now. For finance people, we care a lot on the numerical analysis, because everything to us, we say if there's no evidence, then it's very difficult to conclude the effectiveness of the policy. However, we notice that when we perform the analysis, our measurement is normally from the perspective of finance, but we forget about so-called the human rights, or say labor rights. So recently I engaged in a policy-driven research by government, and there's another group of people, they are from sociology, and they are trying to looking into how the government's net zero policies affect the so-called employments. So this is something ongoing, and then I think it's very necessary to consider at least the employment change, and also to looking into another thing is so-called consumption behavior change. This is also under conducting, and I think at least what I know for the small and medium business, they are really hesitate to increase the cost by that much. Therefore, they will definitely arrange, reallocate their cost if they are forced to increase their spending on green activities. So that is what we are doing, ongoing in progress research, and I think it's necessary. And I read several studies, mainly in sociology research. So far, is quite a concern to sociologists. They really concerned that the government's policy is actually not in favor of the one thing is consumer behavior change, another thing is employment, and extended to community development, because the employment would affect the suburban areas community development. So these are something I think we should pay attention on. And regarding the policy, the incentive one, to be honest, that in Taiwan the government has been using the financing incentive. To be very honest, so far the data I have does not seem very effective. And why is that so? As I say, is somehow cultural like. Those small medium business, they are not short of cash. They don't really the financing incentive from government. Instead, they want the government tell them what should they do. What business you want me to do? What kind of thing? What kind of report you want me to do? So I think the most urgent one so far is we have to investigate all of the carbon emission for public, at least the public listed companies. Otherwise, we don't really know what happened. And second policy that government in Taiwan use is they try to ask the tier one supplier, the large corporation, to help out the tier two, tier three suppliers because they can provide them with the technology enhancement. They try to, provide, because those large corporations, they were engaged in the green activity earlier, and they should share their green activity knowledge to their tier two, tier three suppliers. So this is what we see and observe from the small, medium business. It is ongoing and it is more effective than financing policies.
Thank you so much. Thank you very much.
Thank you.
Thank you, Professor Yan, for responding the question from Professor Irwan. I think we still have one participant raising his hand. I see Dr. Eddie Jurnarsin is raising hand. Probably Dr. Eddie would like to deliver his question or probably on commenting on something. Please, Dr. Eddie.
Thank you. Thank you for the midnight talk. I mean, yeah, I know it's almost midnight in Chicago. Hello?
Yes.
Okay.
Yes,
I just want to make sure. Yeah. So I think it couldn't find a better time than today's world to conduct this paper. It's highly relevant to what we are seeing today. And I think I just want to give you a little comment and suggestion. Like you just mentioned about the triple bottom line. In this paper, you discussed the profit and planet. So the other component would be people. If you go all the way, I think the paper might be stronger. I mean, not only could you go to finance journals, but maybe even AMJ or something like that, right? I mean, it's highly related to strategic finance, even green economics and something like that.
We actually have another project with the management professors. Yes, we do have.
I would imagine,
yes,
I would imagine, it's highly related to corporate
Yeah.
strategy as well.
Yes,
the triple
yes,
bottom
yes.
line, and
Yes.
And unfortunately, we haven't read your paper, so we couldn't really see the details of the data and everything. But from your description, I think you have maybe another opportunity down the road to create your own index, maybe. I mean, basing on whatever you have Refinitiv, you have WRDS and so on. Yeah, you could maybe pick 6 out of 24 or whatever, creating your own index. And also, actually, I noticed that a lot of stakeholders are included, right? Especially suppliers, customers, definitely. The other side that you might consider would be the investor, because I think from literature and also from daily observations that institutional investors really affect how the board of directors and also board of management function. So bigger institutional investors that care more about the environment, this kind of carbon emission energy, this kind of green energy and so on. Like, I don't know, maybe BlackRock, Vanguard, Sequoia, like some institutions like that. They will, of course, push the board of directors and also board of management to go that way, go to the green area. Other
Yes.
institutional investors might not care too much about it. So if you could detect and really include the investors rather than a survey to individual investors, but looking at the majority shareholders, and you could analyze, you could list those green institutional investors and how they really affect the findings. I think that will really make it stronger. Right.
Yeah, very good. Eddie, I
Yeah.
think because the data I use is the US data, so majority of the investor are institutional. And
Right.
and-
But
yeah.
I mean, some of the institutional investors don't really care. I mean, yeah, that's the reality.
Yes,
I mean,
yes,
you
exactly.
could detect the track record, right? That would be a good
Yeah.
thing. You could track, for example, out of I don't know what's the market cap in the US right now, maybe $50 trillion. Yeah, something like maybe a bit less than that. Out of that, institutional play stronger roles, individuals. Many of them care, but many of them don't. Just go for quick profit taking, right?
Yeah.
Going in, going out. But institutional, they stay longer and they care more. They have their
Yeah.
own ideals, values, something.
Yeah.
They will be, I think, make it stronger. I mean, if you could, really incorporate those kind of
Sure.
institutional investors.
Sure.
Yeah, I think that's all for me right now. Yeah, thank you.
Yeah, thank you. I think the last part of the study regarding shareholder proposal is actually the purpose of showing that indeed, a lot of the investors who stay longer don't really care about that. So, they do not raise the proposal to argue with the company's actions. Yes, the result are actually consistent with the suggestion. Yes. And I think there are several questions on the QA.
Yes. Yeah, that's right. We have one question from the panelist book, and we have around 5 questions coming up from the Q&A. But because we only have 5 minutes left, what would be so kind enough to answer maybe a few questions from participants?
Yeah. So now let me quickly answer. I think there's one mention the garbage export activities. To be honest, yes, I agree with you. This is the high emission activity, and I think it's worth to do. And the trouble is I cannot find the data for that. So I do think about this issue, and this is actually hurting the society. Is one part of the stakeholder trouble. And then so far I don't see the data, but there's some case studies related to these issues. So far I don't have the answer to your question, regarding the innovation and development, but I agree that would be an important one. And also how important the climate issue affect the MMA and related to applying ESG, especially in the financial industry. Okay, I think this is what actually I show in the paper. The merger acquisition has some benefit. The major one is it goes fast, and also the driving force to the merge wave is normally come along with the regulational change, a technology change, or economic shock. So I think this is something that related to us. And then regarding the financial industry, I don't think it will be as strong as that, because it's still under the regulation. But it was to looking into. I am looking into the financial industry for other perspective related to the climate issue. So we can talk about that later. I think I have some project ongoing with the professors in Indonesia as well. And let's see. Yeah, it seems like everyone is interested in the banking industry. Yes. Yeah. Let's see. I hope I can have the answer to the banking next year, because it is the ongoing project. Yes.
Yes.
MMA press release sometimes can be very uninformative or overly informative. Yes, it's possible. It is possible. So, but that is the one reflecting the company's intention, not really commitment. We can only say is the intention. And why we care intention rather than the commitment, because it basically shows the company's attitude when they face the shock from their customers. So that's why we need to looking into the implication after they make such announcement. Okay, because sometimes they could just make an announcement and they try to acquire some companies without industrial knowledge, and the outcome could be pretty negative in the long run. So I think that's what we try to do as well, saying that the companies taking these actions may not really solve the problem for the long run. Yes. Company achieve sustainable ESG. Choose the right supplier is the best way to choose. Whether to choose the right, yeah, I agree with you. I agree with you that, we can just identify the supplier to reach the sustainable ESG. But so far, including the research by the literature or by myself, the impact of the CSR or ESG is the one-way implication from customer to the supplier only. There's no the other way around. Yeah. Okay. So.
All right. I think that's the questions that's already come up. Thank you so much for answering all the questions, Professor Yan. So it's very, very nice to have you in the discussion. And I think you will be more than happy, right, to have more discussion with our participants or attendees in the other occasion, I think. So.
Yes.
Okay, so thank you so much again for your kind presentation, and I'm so sorry that because this is the midnight time, so I say bye.
It's okay. It's okay. Yeah.
Yeah.
Thank you so very much
Yeah.
that to have me, and I share the working paper with you, and I hope that your comments is very important to me, that I wish I would incorporate all of them. Actually, some are ongoing projects. As you know, this topic is a really new topic, and a lot of projects are still ongoing. And the NCCU has the Center for Business Sustainability, so we engage all disciplines of the researchers in these centers. And we really hope have the chance to work with the professors in Indonesia and other ASEAN countries, because I agree that the ASEAN regions is going to be a very important one in the future eras. So I think Indonesia become the leader of the ASEAN, play a very important role. So I'm highly looking into the potential research collaboration with you guys all.
Okay, thank you, Hero.
Thank you,
Yeah.
thank you, Tay.
Yeah, thank you very much. Yeah, have a nice
Thank
time
you.
in Chicago.
Yeah.
Thank you.
We are hoping to see you very soon, Professor Yan.
Yes,
I have received your email, so I
saw
the proposal. Yeah.
Thank you.
Yeah.
Thank you. I will see you soon.
Yeah.
Okay.
All right. Thank you again, and have a nice evening, Professor Yan. See you again.
Thank
Bye-bye.
you. Thank you.
Bye-bye.
Bye. Thank you.
Bye.
Bye. Bye.
All right, so thank you so much for the participation of our attendees as well as the panelists. Here is the first plenary session, and of course we will have the other plenary session tomorrow morning, and I'm hoping that you will engage in full commitment into our plenary session, and we'll see you again very soon after the break for the parallel session. Thank you so much, and I am giving back the screen to our dear MC, Miss Yolanda. Thank you so much.